Hi, joining now. What are we talking about? Okay, perfect timing. Hi, guys. Good morning. My name is Michele Guo, and I'm the U.S.-based representative for Animoca Ventures. So we're catching my breath right now. We are catching our breath right now, and we are investing in the future of Web 3.0. We do specialize in gaming, blockchain gaming, that is, and so we believe in the decentralization of Web3 gaming, and we're really investing in the ecosystem and leveraging our network effect of our about 150 portfolio companies to date within Web3. And so they work cohesively together in partnerships to leverage each other's networks and ability to add value to one another. So yeah, good to be here for Animoca Ventures. Thanks.
Okay, awesome. Great to be here. So we're running a little bit late, but I'm very excited for this panel. I'm Alexis Johnson. I'm the president of Light No Media. We do marketing events and advisory for projects in the crypto space. And this panel is focused on investments and investment trends and themes within the world of crypto. So we already kind of got started with the introduction, so I'm just going to kind of dive right in. For our panelists here, we have basically veterans on this panel, and I have some friends on this panel. But for panelists here, what advice would you give, a newcomer to the crypto space looking to invest and also navigate the current market? Starting with Cecilia.
So I think as a newcomer, I would take myself as an example. So I think one advice I can give is get rid of your bias, because as we are private market and project investors, so we always talk to founders and the teams, and I don't have time to follow and chase other NFTs, and I have some bias like it's just a JPEG, maybe it's a hype, whatever, and I just recently talked to a lot of friends who just ape in punk and ape in the very early stage, and really just dive in the talk with them to learn what's the mindset, what's the the points like behind the community. So why is it so popular? So I learned a lot as well. And just yesterday I got 2 days ago I just got my first mutant apes and joined the NFT communities. So I think that's one example I can learn is like get rid of your bias. And I think find the area you are really interested in. I think no matter what the area is, I think you can make your way to rise up. And you can find, that's the beauty of Web3. You can find the right group of people, the right group of community to carry the conversation and also gain the have the financial gain and also the personal interest, your life gain as well, together down the road. That's my advice.
Sure, I can go next. So totally agree with what Cecilia said. I think another piece of advice I always give is, Web3 investor, but overall still an investor. So I would always encourage everybody, whether they're an undergrad, MBA student, kind of existing full-time investor from Web2 or from traditional private equity, to still keep a lot of the fundamentals or knowledge of fundamentals, because we are in a potentially frothy market, very, very cyclical, up and down, to be able to do kind of the basic fundamentals of reading a P&L, understanding how to compare monthly active users across different protocols against each other, basically being able to keep some of the fundamentals in addition to many of the both positive and sometimes negative hype that surrounds certain projects and protocols, I think is super important. So that's another piece of advice I'd give.
Very good point. Just to add on to that, I think it's really important to understand the underlying asset that you're buying in. Last year was the first approval for the ETF, and then people think that okay, it's less risky. Well, actually, it's not. You're still buying crypto, so be prepared for the volatility and be prepared for lost potentially everything that you may own. And then if you understand the underlying assets and you understand why you're buying in that asset, and then you should then invest in it, and also do your own research on the projects that you're investing in. We do our own due diligence for investment, also for listing exchanges, and I encourage all of the retail users. We will help educate about what's going on in the projects, why we're listing that projects, but we always encourage retail to learn about projects and understand the risk involved.
A piece of advice I would give is hedge your risk and diversify your portfolio. I think that goes without saying, and that's more on the TradFi side for sure. Another piece of advice is go with your gut. If a deal looks too good to be true, it's probably too good to be true.
Awesome, awesome. So next question, because we just touched on it a little bit. I know we have different firms represented here. I guess starting with Michele at Animoca, what is your investment thesis and how has that thesis evolved over time? But really for all panelists, what's your thesis?
Thanks, Alexis. So investment thesis, we've been built upon Web 2 gaming and then transitioned over to Web 3 as we're seeing the space right now. That's sort of where the market is headed. But we were really the pioneers and the first to attribute towards this trend. And then when NFTs as it applies to gaming really took off, that's why Animoca came about. And became the leaders in the blockchain gaming space. That's what we were built upon fundamentally. And then from there, from blockchain gaming came NFTs, then investing in the wallets and DeFi and obviously the guilds and metaverses. We've invested in about 10 guilds to date, 30 metaverses to date, and numerous and countless successful blockchain games, including Axie Infinity, which you've hopefully have heard of here. So I guess to answer your question, our investment thesis, how it's changed over time is, we're really contributing towards the Web3 economy by that network effect I already mentioned. And so it's the future of gaming and of NFTs as it applies to gaming, and then all the other, value chains that apply and can contribute towards this greater economic growth and economy. How has it changed over time as well? It's really the future of Web3. We're seeing a lot, really. I think we can all agree it's Web 2.0 or 2.5 transitioning over to Web 3.0. Yeah, that's what I would say for the future of gaming and NFTs.
So I will take over. So I think I will talk briefly represent of Mask and Formless. So for Mask, I think we are an ecosystem fund. We are very, very focused on the Web3 infrastructures. So that's why we invest a lot of middlewares to link to Web 2 to Web 3, and a lot of very fundamental like Web3 protocols such as index tool, NFT verification tool, and a liquidity tool as well. And for the Formless, we are more general, invest in DeFi, CeFi, TradeFi, game, a lot of games, skills. We co-invest a lot with Animoca. And if we are talking about the changes, I think we are entering into I want to call it blockchain 3.0 era, because blockchain 1.0 is more like, I think it's a lot of, tech, a lot of, layer ones. And then blockchain 2.0, we start to see like a lot of different the protocols focus on different use cases. And now I think it's blockchain 3.0 I think it's really changes. Before, in the ideal dream of Web3 communities, it's always tech first. And we think, the user will grow organically or naturally. Well, never will have a cool tag, but it's not like that, right? So we have a lot of famous protocols, even though their tokens are trading at a very high price. But if you look at their users or look at their traffic, it's really hard to see. It's a little bit horrible there on the adoption level. So I think for going forward, for our focus, we are very focused on investing in founders who want to build the option first, who want to, let's say we are looking into some like very solid social protocols, or like such as similar to Miro, similar to Medium as well. So what they do is they are really emphasizing on operation as well. They want to bring like all the good contents, good publishers. They are like content and the user first, but also figure out the tech part and then grow the community and then launch the token. So I think going forward, enter into this blockchain 3.0. I think you just have a cool white paper, to have a cool tech, and you are very lame on operation. I don't think that's gonna last in the future.
Cool. So as I said earlier, we take a chain-agnostic approach. Not like a lot of top VC already have a large position on some of the layer ones. It's a new fund. We're funded by some of the top ecosystems, and we'll help fund their ecosystem projects. And with our teams are all like formal executives from like exchanges or VC. Will help with our portfolio company, with our operational expertise to become section leaders. So for example, we help them with token design, go-to-market strategies, community building, introducing them to the right market maker, and bridge the gap between the West market and East market. We're also very big on gaming. We did a 100 million joint ventures with Gala Games, and we'll be investing into like the broader blockchain gaming industry, and also very bullish on Web3 and Web3 social as well. Yeah.
Awesome. So first of all, I think a lot of what's been said really resonates. One thing, I think we actually find it pretty hard to keep an investment thesis for longer than 3 months or 6 months sometimes in this industry. Besides the inevitable, crypto is certainly going to grow significantly. The future is multi-chain. We as a fund are also super multi-chain and invest across all layer ones and L2s. I think one thing that is quite evergreen is, and just even looking at the numbers, the Electric Capital report on just the number of Web3 engineers, I think right now is 300,000 as of the end of 2021. So if we look at that linearly as like the base case, that number basically grows to 600,000 to 900,000 over the course of the next 2 years. If we look at exponentially, it could go up to 3 million to 5 million. And a lot of what we focus on in terms of a quantitative way of understanding a project is, well, hey, is this actually meaningfully going to change the number of developers that are building on chain? And through that, adding additional use cases, growing the number of users across all blockchains. And so that, I think, is one big thesis of us, which is it's important to drive developer growth, reduce the frictions for developers to move from Web 2 to Web 3, and any projects that are building in that, whether it's an L2, middleware stack, is incredibly interesting for us.
Awesome. So my next question is more so when it comes to the actual vetting and diligence process. I guess starting with Ciara, like what are some of the red flags that you look for when looking at these projects, and what do you want to avoid?
So first of all, most important thing is the team. And we do like rounds of calls with the team to make sure they're actually real and they're focusing on the project. And there are some red flags, like if they're involved with like political issues, if they're doing like gambling, if the after the code due diligence, like if we look into the codes and what they said they're building or they've built is like totally different than what's showing with the code base. That's are all the red lights. And also like security token, of course. Yeah, it's pretty much the same procedures that we're taking for listing tokens. Yeah.
Yeah, I would echo that. Certainly everything comes down to people, and oftentimes people are the cause for great projects and bad projects. The one thing we do pay attention to a lot is vesting schedule. Usually the more bullish the market, the shorter we see vesting schedules. And one thing that's important to Binance is, we actually believe that the 4-year vesting schedule is essentially an artifact from Silicon Valley. When if you started a company or joined a company, you weren't really expecting liquidity for 10 years anyways. But now with token liquidity, people can get it in 18 months or 2 years. So we're really interested in longer vesting schedules, and we see it as a red flag whenever teams have very short 18-month, 24-month vesting schedules.
So I will echo that. I think first thing is the team, and also blockchain areas are super small. So if you have did anything bad in the past, it's very easy for us to find out to do cross-check with other VCs and founders and your previous team members. And another thing I think I think you can and Ciara say already a lot about the teams. I will say token economic is the first thing I will look at. If you see their token economically design, it's like the team have much shorter vesting period than the others. So normally it's a huge red flag for us. And also I think whenever, if you see a token design, like seed around, 10 million, 12 million, and just right after 2 months later, it's like a so-called private sale as a 60 million or 70 million valuation pumped so high, and then like 2 months later, public sale is 100 million. Normally, we will think this is not. We would not use the word Ponzi, but maybe pump down projects or hyper projects we call. So I think that's very often is the huge red flag for us to do, to even look at it into the product, no matter how good it is. I think the mindset behind this tokenomic design is just not right. So I think your community support you, right? And why is that, makes sense for your community pay such a higher price than the seed investor who is just, some random VCs, in the area who don't care about your product maybe, so only care about the return. So sometimes we think that is a huge red flag, at least for me to jump into the deal or to help them further grow in the future.
Yeah. I think all of these points are very valid. So back to the team. So sometimes you see founders that are not even full-time on a project, but they're looking for investment. If you were in our shoes, would you invest in a company and you're asking for money from us if you're not even fully committed or show that you're fully committed while you still have a full-time job elsewhere? Probably not.
Yeah, great points. And I guess for panelists here, what are some of the big trends that you're following in 2022 and beyond? Starting with Michele.
Trends that I'm seeing. So we can talk about the guild space. So Guilds 1.0 was really a way to help games gain user acquisition. So it was a quick user acquisition funnel for them to benefit in the form of scholars. Scholars play the games in the form of play to earn games, and their incentives was very clear, right? So in Guilds 2.0, I'm seeing, and I hope to see more of, is tools. So the financial side of guilds, providing these scholars with abilities to maybe easily, yield farm with some of the NFTs or other tools like on the accounting side, tools that are enabling users and gamers to help better with their incentives, really. So that's a trend that I'm seeing and I would like to see more of that's specific to guilds.
So I think echo Michele's point. I think in the 1.0 era, so you will see a lot of interesting concepts, right? Such as guilds, such as play to earn, such as blockchain games. There are certain games which super huge, but they launched the NFT support their financing process. I think we have seen a lot of experimental concept there, and as the 2.0 or like 2.5 like era, we start to see more sophisticated tools to help polish those whatever concept is. For guild side, echo that we are seeing a lot of guilds for guilds, or tool for build guilds. A lot of famous guilds, even though they have tens of users, 10,000 of users, but they still managing all the process manually inside. So that's why we are talking to teams who have like 15 or 20 years working experience in the gaming and the SaaS area to start to help other guilds to actually facilitate their in-guilds management process, same as NFT area, right? So before we see a lot of tools as NFT verification, NFT browsing tool, NFT indicator tool. There here and there a lot of projects there. So we start to see some like very very polished, even like Web2 UX similar product who want to consolidate all the like pieces or all the puzzles together. So they either build inside side in a company where either they just partner with and put all the pieces together to make it is much more powerful and a strong product. So I believe like a blockchain in this area, we will see the real adoption in a couple of years. Maybe not immediately, but I believe there are like more and more sophisticated to build to improve the area.
Trends going forward. So back in 2017 and 2018, that's where we invested and listed like public chains like Algorand, Polkadot, IOTax earlier. So Solana, all of those great infrastructures. And in this recent 2 to 3 years of development, it's finally ready, and we see applications are booming. But I think going forward, it's going to be really easy for any builders in the blockchain space to build their own chain. So the chains will be just gates for access into blockchain space and metaverse. And I think cross-chain and multi-chain is going to be the future. And so we are really bullish on zero knowledge and a lot of the other like multi-chain applications and wallets. So that's the first trend. And then also like Web3 social, because I think that's kind of like the bridge, and the connection is more like horizontal, that can connect all the communities together, connects all the different layers together, and real use case scenarios, and with great communities. Also really bullish on gaming, but we have been really conservative with investment into like single games, because I think it's going to be really hard for them to survive where there was not well-designed play-to-earn model, especially in the bear markets. But still, I like horizontal things like management tools, skill management tools, or like engines, where I think that's going to be really easy for them to scale in the future. So yeah, those are the trends that I'll be seeing, I think, in the next few years.
Yeah, very quickly, I mean, I think one thing that hasn't been mentioned so far, I agree with everything that's been said, especially since we're at ETH Denver, I think it's worth talking about DAOs. Just reflecting on 2021, obviously it was known as the year of institutional adoption, the year of NFTs, the year of also just kind of L1 and L2s. But I think just the proliferation and the number of DAOs was actually pretty extraordinary last year. And this year we see that continuing to happen. So tens of thousands of new DAOs being created across the entire market. And TBD on the hit rate of DAO success, in all honesty, in terms of long term. But to what was mentioned across this group here, infrastructure and tooling, whether it's especially in that middleware stack, I think is going to be incredibly important. So DAO as a service, right, to put it bluntly, I think is going to be one thing that is going to be incredibly important for us to invest into this year.
I just wanted to add on interoperability, cross-chain, and sort of, I guess, tying in all the subsectors that we spoke about. I think that would be the future for sure, and that's what we're looking into, though very incredibly difficult problem to solve for, something worth to look for and talk about.